2021 turned out to be very profitable in general for those who invested in Wall Street. All three major indices, the S&P 500, the Dow Jones Industrial Average, and the Nasdaq, touched record highs this year.
Yeah, baby! Yeah.
Several factors, including fiscal stimulus packages, the Federal Reserve's monetary policy stance, and robust economic expansion, supported the markets. Yet, investors seem to be defensive today. This is not just because of persistent inflation, disruptions due to Omicron, and concerns related to supply chains, product shortages, and labor issues.
That's not enough.
The S&P 500 index has been performing exceptionally well. 28.2% gains in 2019, 18.5% in 2020, and 26.9% in 2021. So investors are now skeptical about the continued robust stock market performance in 2022. One of the ways to hedge against these concerns is to choose stocks that offer a high dividend yield. Dividend-paying stocks attract investors because they act as a steady source of income. But before buying a high-yield dividend stock, you need to make sure that it's not a dividend trap.
It's a trap. It's a trap!
A decline in the company's stock price may be an indication of fundamental weaknesses, and if those persist, there's a high chance of further price degradation. All of the stocks we're looking at today have a dividend yield of 4% or more, have a market capitalization of more than $10 billion, and outperform the S&P 500 index significantly in 2021. So let's get rolling. Number 5 on our list is a financial service leader headquartered in Newark, New Jersey. Prudental Financial, ticker symbol PRU, offers a wide range of financial products and services, including life insurance, annuities, retirement-related services, mutual funds, investment management, and real estate services. Prudential has emerged among the top 5 individual life insurance companies in the United States. Given PRU's leading position in the universal term and variable life insurance and expanding retirement business, premium growth is expected to continue in the coming quarters. Prudential is undertaking several strategic initiatives, including disposing of some of its international operations to focus on higher growth markets. The company's closed businesses in Korea and Taiwan, choosing to focus on strengthening its footprint in Japan, Malaysia, and Brazil, as those are expected to continue to be attractive markets. The company is also expanding through strategic acquisitions, which are expected to complement its existing set of capabilities and bolster its presence in emerging markets. PRU has a market cap of $40 billion. It currently boasts a share price of $109.92 and a dividend yield of 4.25%. Analysts are neutral to bullish on this stock, and when we look at the last 12 months, PRU shows a total return of 45.3% versus 28.7% for the S&P 500. Prudential pays dividends each quarter, with its last payout of $1.15 on December 16, 2021. Now, number 4 stock today is MPLX Limited Partnership, ticker MPLX. It's a master limited partnership that provides a wide range of midstream energy services, including fuel distribution solutions. The company also has processing facilities for natural gas. MPLX, based in Findlay, Ohio, is well protected from commodity price fluctuations since the partnership with Marathon Petroleum Corporation generates stable fee-based revenues from diverse midstream energy assets via long-term contracts. The partnership is well poised to capitalize on the growing demand for fresh midstream assets like pipeline networks and processing units. MPLX's recent $9 billion acquisition of Endeavor Logistics LP is expected to position its midstream business for long-term success. The acquisition increased the company's footprint in the prolific Permian Basin. MPLX beat capital spending expectations of $800 million by about $150 million, showing a commitment to cost control. MPLX's focus on lowering cost structure will ensure higher profit margins over the long term. MPLX has a market cap of $29 billion and a current share price of $29.93. It has an impressive forward dividend yield of 9.53% and is the highest on our list today. Analysts are generally bullish on this stock for 2022. It pays a quarterly dividend of 71 cents based on its November 12th payment in 21 and almost doubled up the S&P 500 in 2021. Its total return of 53.92% made the S&P's impressive 28.7% return Look a little pedestrian. Now, number 3 on our list is PetroChina, ticker symbol PTR. PetroChina is the largest integrated oil company in China. It was established as part of a restructuring of China National Petroleum Corporation, a state-owned entity, which currently holds a stake of 81% in PetroChina. With a market cap of $81 billion, PTR's prospects are impressive in the downstream sectors. Strong growth in China's middle class and automobile ownership is expected to fuel the consumption of refined petroleum products. And the company's natural gas business offers lucrative growth prospects in the coming years as China moves from coal to natural gas. Now, over the past few quarters, PetroChina's natural gas and pipelines business has been benefiting from a decrease in operating expenses, optimal utilization of its marketing channels and resources, as well as pipeline asset restructuring gains. As of today, PetroChina has a share price of $44.98 and a trailing 12-month dividend yield of 10.49% and is considered a buy or a strong buy from almost all major analysts right now. Looking over the last 12 months, PTR shows an impressive total return of 55% versus the 28.7% of the S&P 500. PetroChina pays dividends semi-annually, which is a little different from most on this list. Now, its last payout was $2.01 on November 8th of 2021. Moving on to the next stock on our list, we have number 2, ONEOK Incorporated, ticker symbol OKE. The company is based in Tulsa, Oklahoma, and is an energy company engaged in the natural gas and natural gas liquids business. It has a market cap of $26 billion and is making significant efforts to boost its performance. Total natural gas wells connected were around 335 in 2020 and about the same number in 2021. With production volumes resuming normalcy, ONEOK is poised to benefit from long-term fee-based commitments in its natural gas gathering and processing and natural gas liquid segments. ONEOK continues to invest in organic growth projects to expand in the existing operating regions and provide a broad range of services to crude oil as well as natural gas producers and end-use markets. Additionally, capital expenditures have been steadily declining in the range of $525 to $675 million for 2021 compared with $2.1 billion in 2020. OKE has a current share price of $59.99 and a forward dividend yield of 6.36%. Analyst outlooks range from neutral to very bullish, and it's more than doubled the performance of the S&P 500 last year, with a mind-bending total return of 64.67% versus the S&P's 28.7%. Its last quarterly dividend of 94 cents was paid on November 15th of last year. Now, before we get to our number 1 stock on the list today, if you've gotten any value out of today's video, please take a moment to pop that like button. I'd really appreciate it. Now, on to number 1. Our number 1 stock on today's list brings us to the technology and data space with Iron Mountain Incorporated, ticker symbol IRM. Iron Mountain provides records and information management services and data center space and solutions in more than 50 countries. This S&P 500 member operates as a real estate investment trust and serves more than 225,000 customers from various industries through its more than 1,400 facilities. Based in Boston, Massachusetts, Iron Mountain enjoys a steady stream of recurring revenues from its core storage and records management businesses. The company supplementing its storage segment performance with expansion in its faster-going businesses, the most notable being the data center segment. With a market cap of $15 billion, the company is making organic growth efforts on the back of expansion projects and developments. Iron Mountain had total liquidity of $1.6 billion as of September 30th of last year, showing ample financial flexibility to meet its near-term debt obligations and other capital commitments while pursuing growth opportunities. Currently, Iron Mountain has a dividend yield of 4.73% and a share price of $51.32. Analysts are generally bullish on this stock at the start of 2022, and when we look at the last 12 months, IRM shows a total return of, are you ready for this? 85.4% versus 28.7% for the S&P 500. Wow. Iron Mountain pays its dividends quarterly, with its last announcement of 62 cents being paid on January 6th of 2022. Now that wraps up our look at the high-yield dividend stocks that absolutely destroyed the S&P 500 in 2021. If any of these look like something that might be of interest to you, I encourage you to dig a little deeper and see if they might be a good fit for you, your goals, and your personal risk tolerance. Let me know in the comments if you own any of these dividend stocks or if there's another that maybe is worth a closer look. On the right, you can find a few more videos, including my current favorite REIT stock out there, Arbor Realty. Thank you so much, and see you next time.